Whoa, now welcome back to another episode of Where the Money At. And you know we keeping it rocking and rolling. We on episode 35 and you know we locked in on cryptocurrency right now. So today we're going to do a little bit of Bitcoin technical analysis. Then we're going to get into how investors and institutional investors view Bitcoin and Ethereum, because we as everyday crypto investors really in the space view it different from how they view it. Then we're going to get into how crypto is being spent, how can it be spent in new ways it can be spent. Then we're going to get into regulations and new crypto tax forms that are coming out. So let's get right into it. Let me share my screen really quickly. So let's refresh CoinGecko real quick. We got Bitcoin sitting at 26,700. We got Ethereum sitting at around $1,560. And we have BNB sitting around $205. As you've been paying attention to the last couple months, it hasn't really been any exciting price action. But within the last week, we've had a little bit of downturn. Bitcoin losing 3.6%, Ethereum losing 5%. And XRP taking a hit, losing 8.5%. I don't know what that's about. But, it's been a down week. So let's just go into trader view and look at the local ranges. All right. So from basically Saturday, September 9th, we've been on a slight uptrend. And, nothing too exciting. We formed a new range going upwards. And all I see is we've touched the top of it and we're touching the bottom of it. You know what I'm saying? So it could be, roundabout, take a leg down, roundabout, take another leg down, roundabout, take another leg down. We could see if that's what's going to happen. But let me erase those because we do have the 200-day EMA. And around August 16th, we went below it, tried to turn it into resistance, but we broke above it, but we couldn't turn it into support. And we've just been going back and forth, and now we've broken below it again. So let's see what happens. And what I notice about the EMA is you can't go against it too many times before it becomes solid. So we'll see what happens. But let's just take a look at the fibs really quickly. So if you take a look, we're between the current price action is between the 0 and the 0.236. So if we stay in this area and we turn the top of the 0.236 into resistance, we could stay around the 28,000 range to the $15,000 range for the next, who knows? And we'll be under the 200-day EMA. So who knows how long we'll be under there? Or we could take the next leg up, and we really don't have a lot of price action between the 236 and the 0.5. We don't have a lot going on. So anything else, it'll be new, and we'll probably stay around this range right here. We'll probably be around the 382. So if we had to take a look at one more fib retracement, just so we can have a better look at what's going on locally. Of course, we have this big downtrend coming from 70,000 that we're kind of playing with right now. And we're in the golden range between the 382 and the 236. So we'll probably be between 25,600 and 28,000 for a little bit. That looks like a good range that we can stay in for a while. But unless you're a trader, the day-to-day price action doesn't really mean too much. So let's get into the news. One thing I want to talk about today is, there's a difference between the everyday crypto heads like you and I and the institutional investors, like if you can see here, VanEck Ethereum strategy from VanEck, from their firm. They view it differently because they're traditional finance. So let's take a look at how they view it. We're not going to go through the whole interview, but the video is only 4 minutes, but we're going to go through about 1 minute of it, and we're going to break it down and talk about it a little bit. So let me turn up the volume a little bit and go to where I marked it. About 2:30. So this is Jan VanEck. So he is the CEO of VanEck, and these are his shares. VanEck, they came out with Ethereum futures, and they're working on spots, and they're one of the many companies in the mix trying to get spot cryptocurrency ETFs.
Jan, taking a step back, I know you're a student of history in the way that you invest at VanEck. So tell me, what's your theory of the decade, sort of global economy-wise, and where does crypto fit in?
Well, the decade, I think we're in a completely new paradigm when it comes to rates, and you just discussed that, and you discussed it a lot. So I won't get into that, but I think you have this higher for longer, tighter Fed stance, and that's not necessarily positive for Bitcoin or gold.
So what did he just say? He talked about the interest rates, and we bring those up a lot. So they talked about higher for longer. So that's going to put pressure on highly liquid assets or risk off or risk on, whatever, the ones that people tend to get in and out very quickly, assets like cryptocurrency. You know what I'm saying? Like this is not a 401k level yet. You're not going to take money in and out of a 401k very easily without thinking about the ramifications of what's going to happen. When it comes to cryptocurrency, you move in and out of that very fluently without thinking about what's going on. But hold on, I want you to pay attention to that very last thing he said. And this is my point about how these individuals in traditional finance is viewing cryptocurrency, BTC and ETH right now.
I won't get into that, but I think you have this higher for longer, tighter Fed stance, and that's not necessarily positive for Bitcoin or gold.
Not necessarily positive for Bitcoin or gold. See, this is how I believe they're thinking about Bitcoin. Like the first narrative was digital gold. Okay, I thought about that and I didn't believe. It's not that I didn't believe, it's just I was wondering how other people viewed it. Like how seriously were they taking that narrative? But as you can tell, these individuals are now putting Bitcoin next to gold and Bitcoin in the same category in their mind. So what does that mean and how can we take that moving forward? Well, we're in a tight economic situation in the US and things seem to be getting tight globally. Global tensions are rising and it's looking like international real estate is going to have an issue. It's looking like commercial real estate in the US is going to have an issue. So what does gold do in these times? So that may be something we could think about of what Bitcoin could possibly do in these times. And from what I understand from gold, it tends to do well in recessions. Not saying that Bitcoin is automatically going to do well, but there is a narrative that people are thinking about as if what is Bitcoin going to do during the recession? Because it's never been in an environment like this. And we want to see how others are going to treat it now that it has more validity, more financial products behind it, and more exposure.
Ethereum, I would look at as an aggressive growth investment, sort of a high-tech stock in a way. So that's sort of speculative, John. So that's how I'd kind of break out the universe.
And so
boom, he views Ethereum as a high growth stock, a speculative tech-like stock. So those were my 2 points that I really wanted to get into. And I'll end this interview with that. But he's viewing Ethereum as a high growth tech stock and very speculative. And you know what? Let's go ahead and finish what he says. I think what he says at the end is pretty important too.
Would you position that in a portfolio then in that way, like extra risky?
Absolutely. Thematic, speculative growth. That's for the Ethereum product. Absolutely. For Bitcoin, I think it's to me much more of my core portfolio because the biggest risk in the markets is the federal budget deficit. And we don't know how that's going to play out. And I'm not just talking short-term government shutdown. I'm calling it how do we fund the $1 trillion budget deficits and will Washington get around to it before there's a crisis? And that's why it's really hard to time this stuff, but I like gold and Bitcoin in my portfolio now.
Very interesting. So they're talking about the budget deficit, how we're going to handle it in the future, and what Bitcoin's role could possibly be. So let's just keep in mind and have that as something that we're looking out for. So the next thing, we're just moving on to the next subject. It's a question that I've always been asking myself, and I'll put it to you like this. When is crypto going to turn into currency? We call it cryptocurrency all day, every day. That's what it is. But how many things have you bought with crypto? I haven't bought much with crypto at all. So there's new products and new things been coming out to where cryptocurrency can be used to purchase things. And you know what I'm saying? Let's get right into it. So it's just a little article I found. This came out actually just yesterday. Luxury hotels around the world that are now embracing cryptocurrency. And there's 5 luxury hotels. Now, this is probably just an ad, but you know what I'm saying? The more of these ads are going to come out, and these things do add up to have validity inside of the crypto space. So really quickly, a lot of these I'm not going to be able to say. Andermatt in Switzerland, a pretty nice looking hotel out there in Switzerland. Another Swiss hotel, Dolder Grand in Zurich. That looks amazing. You know, and this is a luxury lifestyle magazine. You know what I'm saying? So everything's going to be super fly. There's one in Dubai. There's one in Phuket, Thailand, the pavilions. That looks beautiful. So my main question is, when is crypto going to become currency? And there's more and more of these situations that are going to come. So I guess now luxury hotels, you're able to pay and book hotels for these things. And I'm just wondering, when are we going to get to the point where we're buying candy bars and bubble gum with cryptocurrency? Because that's when it's going to be on the next level, and transactions are going to be going ridiculously crazy. Because right now it's just peer to peer, but when we start adding it to more and more daily lives, to where more transactions can be added and more companies can create products and make fees from these, it's going to be ridiculous. So let's keep an eye out for that. And the last thing I want to talk about today is the Biden administration unveils new cryptocurrency regulations. So we talk regulations all day, every day. What's a security? What's not a security? Who can do what? That's not really what I care about. I'm gonna be honest with you. I don't care what's a security and what's not. Eventually, everything is going to be a security, or all cryptocurrencies not going to be. You know, in the future, that's where it's going. So here's the point. A new form, 1099 DA, where DA stands for digital assets, is intended to make calculating taxes easier on consumers. That's the point. New tax forms are coming out. This is not a new tax. This is a new tax form to where you can keep track of your digital assets. Because right now, I'm pretty sure the FBI and the SEC and everybody is having a fit trying to track the taxes of profits that people have made from crypto. But now it's becoming more mainstream, and they want to make it easier for consumers. Well, not easier for us, but easier for them to track. You know what I'm saying? It's never about us. But this is a byproduct that makes it easier for individuals to track their taxes and be able to pay and do what they have to do. It is normalizing cryptocurrency. And, you know, I had to go do a little more research, and I went to irs.com and went straight to the source, and it's there. So I'm going to read this really quickly. For the sales or exchanges of digital assets that take place on or after January 1st, 2025, the proposed regulation will require brokers, trading platforms, payment processors, et cetera, to report gross proceeds on a newly developed Form 1099 DA. So I recommend that you go through this and read it to understand exactly what it is. I still have to do a little more research myself, but it's looking like they're going to make it more mainstream and easier to report your taxes, because me personally, I don't think a lot of people in crypto are trying to dodge taxes who make profits. That's the narrative that they try to put out there, but anybody I know in crypto is not just trying to not pay taxes. Like anybody I know who made, 10 grand profit in stocks, they will report that. And most people I know will probably report their cryptocurrency gains as well. So, that's all I want to think about. Everything is setting up to where cryptocurrency is becoming normalized. It's becoming easier to deal with. It's becoming a part of everyday life. And I think we're in a position where we could put ourselves in and become authority in this space, learn as much as we can, and put ourselves in a great position in the future to spot out opportunities. None of this is financial advice, but these are just things that I want us to continue to think about. So, what I'm saying, that's it for the episode today. I always appreciate y'all rocking with me, man. Drop a like, comment, and subscribe. We almost at 50 subscribers. Drop that like. I'm going to holler at y'all.